Hello everyone and welcome to the Market Trend Tracker. My name is Subhash and here we are on the weekly basis performing the market trend analysis to spot if there is any sector or any stock is of our interest. If you are following the financial news, you might have noticed that this month we have seen the biggest correction in the market after COVID-19. We will try to analyze the key reasons for this correction. Let's jump to the analysis. In general, a broad market correction is under process. Nifty 50, Nifty total market, mid cap, small cap, you talk anything that is under correction. These indices have established a clear downtrend by creating a lower low and lower high setup. Furthermore, they have breached their key moving averages like 21-day exponential moving average, 50-day or 100-day exponential moving averages. Similar to the key indices, sectoral indices have also suffered from this downtrend. With all the indices breaching their key moving averages, some of the sectoral indices have also breached their 100-day exponential moving average and 200-day exponential moving average, indicating a more severe bearish trend. As you can see from the heat map that there is no sectoral index which is running in green. What I mean is there is no sectoral index in the market which is above its 21-day moving average. Now, as usual, we will be analyzing the sectoral trend in the market. For that, we will be utilizing the concept of relative strength to identify which sectors are having a strong tailwind and which sectors are facing headwinds. As always, our strategy is to identify superperforming stocks which are leading these trends. Once we identified those companies, we will dive deeper into the technical setup and see if there is an entry point available for us to take advantage of. As I mentioned, that we'll be using the concept of relative strength and breakout strategy. I have explained these in my earlier videos. Please have a look at those concepts for better understanding of this video. Just to set up the tone of the video, please note that a breakout with strong relative strength and huge volume signals a very powerful move, and we are trying to capture that move in this video. For the best performing sectors on this week, IT has outshined every other sector, followed by finance, services, FMCG and mid and small healthcare sectors. It is to be noted that Nifty 50 corrected by more than 3% in this week only. IT sector showed strong momentum on monthly performance also, followed by healthcare, finance, India digital and services sector. It is worth to notice that in last 1 month, Nifty has corrected by more than 6.5%. Pharma and healthcare sector is outstanding performer on quarterly performances, with IT, digital, finance and services sector also performing well. It is to be noted that in the month of October itself, which has not yet completed, the foreign institutional investors have sold a net value of 97,000 crore rupees. Even though the domestic institutional investors are trying to fill the gap by purchasing as much as possible, the sell-off seems to be very high. When we try to see the post performance of the stocks, Realty, Matter, PSE, Media and PSU banks are the worst performer on weekly basis. Realty, auto, oil and gas, energy and consumption sectors kept showing weaknesses on monthly performance. PSU bank, oil and gas, public sector enterprises, CPSE and realty sector show persistent weakness on the quarterly side also. We can clearly see that all the sectors are not performing in the cycle of correction. When we compare the top performing and worst performing sectors and analyze over long and short period of time, we can say that overall market condition is very volatile and it is time to relax and stay away from market unless you get a very good idea to play with. None of the sectors are performing good. However, some individual stocks are trending in this volatile market. In case you are still holding stocks from this sector and wondering when they will start giving returns, it is advisable to sell this and sit on cash until you see a sign of reversal, because there is no thrill in riding a sinking ship. Let's now dive deeper into the companies that we have identified earlier. Please note these companies to make your watch list and perform your own due diligence. However, it is evident that these are the few companies which are giving a very good return in this negative market condition also. The major takeaways of this week are: market is in downtrend and very few opportunities available to invest. Market is trying to re-rate itself after a very good bull run. To answer why this is happening, we need to connect some dots. Foreign institutional investors started this sell-off few weeks back after announcement of stimulus package from China. Domestic institutional investors covered it well, where market was trying to consolidate. The patience of retail investors got tested due to the uncertainty, and ultimately they are selling to either book profit or to cover losses. Let's see some of the stocks and their setup this week. Paytm, coming in our radar since we started this channel, and it is still going strong. HDFC Bank, Breakout failed last time and has given Breakout again with substantial volume. It will be very interesting to watch how it will behave in these market conditions. Suven Pharma, breaking out from a tight flat base. Be very careful to invest in this kind of a setup. Coforge, this has been in our radar since the start of channel. However, now it is out of our ideal buying zone. Max Financial Services, it showed good momentum last week. However, it is far from ideal buying zone. Radico Khaitan, it is far from ideal buying zone but trending with volatility. Persistent, it is also far away from our ideal buying zone. Are you already watching any of these stocks or sector? Please drop your comments below. Next week, stay tuned for our picks for the Muhur trading session scheduled on November 1st between 6 pm to 7 pm in the evening. We'll try to bring our analysis a day or two prior to 1st November. As always, we will be publishing this weekly analysis report on every Saturday. If you like our work, please do not forget to hit like, subscribe and share buttons. It means a lot to us. It keeps us motivated to create content for you. Wish you all a very happy Deepavali. Thanks for watching. See you in the next video.